Today, Bitcoin bounces back after its worst month ever. The FBI adds the crypto queen to its most wanted list. And Alchemy's CEO explains how it helps build crypto infrastructure. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital asset prices are ticking higher this morning. By noon Eastern, Bitcoin traded at around $19,000, Ethereum traded at $1,000, and Solana traded at $32. Now, yesterday's losses capped off the worst month for Bitcoin ever, and the world's largest cryptocurrency fell nearly 60% in the first half of 2022. Ethereum, well, it's down more than 70%. Okay, let's talk about the top stories. First, the CEO of embattled crypto hedge fund Three Arrows wants to sell his Singapore mansion. Suzu bought the $35 million mansion last year, but according to Bloomberg, he has been looking to offload the property in recent weeks. Of course, the sale is happening amid this stunning fall of the hedge fund, which had $10 billion in assets under management just a few months ago. Now, well, it's facing liquidation and reprimand by Singapore's central bank. Next, the FBI just added a new person to its most wanted list, the crypto queen. Ruja Ignatova is her real name, and she's the founder of the OneCoin cryptocurrency, which launched back in 2014. Now, that cryptocurrency allegedly defrauded investors of more than $4 billion over 3 years before disappearing. The project allegedly had no blockchain securing transactions, and coins were minted from nothing. The FBI is offering $100,000 for information that leads to her arrest. Finally, VanEck just filed for a spot Bitcoin ETF again. The investment firm made the filing with the SEC about 8 months after the agency rejected their last proposed spot ETF. And of course, the SEC just rejected Grayscale's spot Bitcoin offering this week. Advocates for spot ETFs say it will bring wide adoption from institutional players and bring low-cost Bitcoin investing to individual investors. Meanwhile, the SEC is still raising concerns around market manipulation. Okay, for our main story today, Crypto World's Kate Rooney spoke to the co-founder and CEO of blockchain company Alchemy. Many crypto experts have said that this crypto winter is the time for companies to build. We ask Alchemy how it's helping crypto businesses do just that.
Let's start with what Alchemy does. So it's a developer platform. What does that mean in layman's terms?
The simplest way you can think about Alchemy is if you're technical as the AWS of crypto. So whenever you open an application like Lyft or Uber, Amazon is actually powering the technology behind that. When you open an OpenSea or an NFT and look at that, that's actually powered by Alchemy.
So these apps you're talking about are built on blockchain with the sort of behind the scenes infrastructure?
Exactly. Alchemy is basically, you can think of it as if you need to build a skyscraper, you need construction equipment, cranes, front hoe loaders, these different types of things. Alchemy provides the tooling and infrastructure that developers need to build applications.
And so what's the appeal for a developer who's going to build an application? Why would they want to build it on blockchain versus all of the other options out there?
That's a great question. When you think about the big shifts in technology, there's 3 technology shifts in the last 100 years that have really changed our world. The first one is computers, and that was the idea that machines could repeat and follow human instructions. Then the internet came along and allowed machines to exchange information between each other. Then blockchain came along and allowed machines to exchange value. So I think there's a lot of applications you'll see that try to take Web 2 concepts like internet concepts and bring them to the blockchain world. But fundamentally, the applications are going to change the way we interact on a daily basis, are going to be the ones that take advantage of this new capabilities to do new things that we couldn't do before. Maybe a quick example of that. So on the internet, the first applications on the internet were people taking real world items and moving them online in a kind of skeuomorphic format. So for example, putting your recipes online or having a white pages online. And those were useful. It's marginally more useful than a physical copy of the white pages. But the true applications that really changed the game were things like social media, email, Uber, Airbnb, these kind of things that were never possible before internet. So we'll see a proliferation of applications like that for crypto as time goes on.
I want to get your take on what you're seeing in some of the examples you mentioned. Last week, though, you had some news, $25 million grant for developers. Why do that in a time when other crypto companies are really tightening their belts and trying to preserve costs? Why spend that money on developers right now?
This is something that we've thought about for many, many years. The last several rounds we did, we've actually been a profitable company for a very long time. And we raised the money so in cases like a downturn like this, we could double down and reinvest in the developer ecosystem. When you see a market downturn, this is kind of similar to the dot-com bubble, not as extreme in magnitude in terms of the crypto crash, but you have seen a pullback in terms of resources for VCs coming to the space and funding early stage companies. We believe very strongly that what's going to make crypto successful and what's going to make Web3 successful is the people who are building new applications being able to do that. So we're doubling down to help push the whole ecosystem forward. And ultimately, our goal here is not just to make Alchemy successful, it's to bring Web3 to the world.
And so the more they're building, that would seem to be better for your business. What's the profit engine for Alchemy, and how are you guys making money?
We have a very long-term view of profit. We are profitable now, and we're in a very good cash position, which allows us to do these kind of initiatives. But the whole point of Alchemy is really to bring this new technology to the world and make it accessible. In order to do that, we have to reinvest in the cycle of life, or as we call it, this virtuous cycle that enables a new industry to be built. In any new industry, it's the same cycle. You have developers or builders who are creating something, then consumers come and use those products that developers made, and then developers come back and build more products because of increased consumer demand. So that is kind of the virtuous cycle that powers any industry. When we think about crypto, it's exactly the same, and we are heavily focused on making sure that first part of the cycle is well and alive, and that's our kind of focus right now, increasing developer adoption.
Is it the same revenue model, though, as an AWS? Are you taking sort of a percentage from developers? How do you guys make money in this process?
We have the same revenue model as AWS. It's a compute-based model. So every time people effectively pay per query. So if you go to OpenSea and view an NFT, we get paid every time that page reloads.
And are developers deterred by what's going on right now with crypto? And we mentioned some of the prices down significantly, less VC funding. Are you seeing that deter developers right now? And what's the overall sense of kind of the vibe right now in crypto among developers?
So we've actually never shared this publicly on broadcast before, but we have access to a lot of data that other people in the industry don't see. We've seen some very interesting trends. So as you probably know, the macro crypto market has had a severe crash. When you look at NFT trading volume alone, from the heights in November 2021, we've seen a 70% drawdown, which has been potentially scary if you're looking at it from a macro perspective. What we've seen on the fundamentals level has been exactly the opposite. Since January this year, we've seen a 3x in the number of developers building in the space. This is across multiple chains, not just Ethereum, across Ethereum L2s, across Solana. On Ethereum L2s alone, we've seen a 465% increase since January in terms of developer adoption. So what we've seen as that, despite the hype, there is a big surge of people building in the space. And the reason this is really interesting is, in contrast to 2017, when there was a 2017 crash, what we noticed is there wasn't a huge surge in builders then, especially in the larger companies. We have a lot of Fortune 10 companies, Fortune 50 companies who are coming in and really excited about building and deploying crypto products to their billions of users. And that's something that we didn't see back in 2017. So it's a really, really exciting time right now.
Okay, that's all for Crypto World this week, but you can find that full interview and more over at cnbc.com/cryptoworld. We'll be back on Tuesday. Have a great weekend, and we will see you then.